I think silver prices could easily double from where they're at. I think that's without a question. I think that we'll see it. So the metals I really like to break up between, you have gold and then you have the other metals, and silver is in with the other metals. The problem is that silver and gold are often closely correlated and connected just because of the particular person who trades them in tandem, exits them in tandem. So that's why silver has a difficult time breaking away. Interest rates have been rising, and interest rates, especially on the 10-year and the 30-year, could go substantially higher, as they were when you look at like 2018 when rates were at their highest level. You look at gold, inversely, was down at 1150. So realistically, gold could see another $150, $200 correction. And I know gold investors, they don't want to hear that, because they can, but they should understand that it is possible. And it has nothing really to do with any kind of conspiracy theories or anything else. It's just because gold works inversely to interest rates. So when you look back in 2018, in right around August to October, that was the high in GDP, high in interest rates, jobs were skyrocketing, and gold was at 1150. Since then, the business cycle had peaked. You come around to COVID, you have the crash, you have all the money printing, you have low interest rates, negative rates on the real rates, and you have all the bullish scenario that it can get. Goes up to 2100, makes an all-time high. Since then, rates have been rising, and it was around August is when they had hit their bottom. Look at the 10-year, 0.4%. Since then, it's been rising, and that will weigh in on gold prices. So the gold as itself has that as its big challenge. You look at the other metals, though, basic materials, I think like copper, platinum, palladium, silver, rhodium, all the other base metals, tin, zinc, lead, everything out there, steel, I think all are in bullish cycles, and they should continue to cycle higher. Again, silver, only problem, connection to gold. So silver, on the other hand, though, the thing about silver is that, anywhere when you get into the low 20s and even like the teens, people look at it as long-term, it's cheap for whatever that reason is. They start accumulating coins. You can look at many of the people that sell coins are all sold out. They sell at incredible premiums. So there is this underlying floor on silver that I think has come up substantially over the years. So I think mid-20s, to low 20s, I think is great value. I don't necessarily see that we'll get below, into the teens again. So I think that there is this parachute that silver has, and it hits the ground somewhere because of demand and increased demand from other areas, green energy, things like that, not only investment demand, industrial demand, whatever. Upside, I think silver has got two things. I think it's going to draft higher because you can look at the gold-silver ratio, which continues to break down. So it is rallying. It's not rallying at the speed that most people want, and it's understandable, but I think silver is a bit of a lotto ticket, and all of a sudden it gets to $30, $35, $40, $50. These are not out of the question by any means. So I don't have a specific price target on the upside, but I think that the green shoots, and when you see these silver squeezes, you got to let a little bit go. That's all it is. Take profits up at somewhere. I think silver prices could easily double from where they're at. I think that's without a question. I think that we'll see it. The problem is that we see it every so many years. You get these squeezes that occur. Now, the demand for silver is continuing to slowly build, and it continues to build, and the uses build, and everything else, investment demand, again, industrial demand, all the way down to, using silver for medical purposes and everything. All these demand structures are there that are lifting silver prices gradually, but you'll get these periods of shocks where there's not a lot of supply, and the demand all of a sudden, it's mainly the investment demand comes in, and you get these like $35 spikes, $40 spikes, things like that. A person needs to be able to let some of it go at that area, build some capital, wait for these pullbacks. I just don't see silver going bam to $1,000 and you missed it. It's not like a Tesla stock or like something like that. It's shocks, and you need to take advantage of. So looking at the very two, GameStop versus silver, where we saw these short squeezes occur, and one had continued to go up, GameStop, and also hold these levels where silver is more of this shock that went up and down. The differential between the two, and I don't think you can compare them, as asset classes that have very similar characteristics. That underlying thesis, the short squeeze it was both there. However, GameStop was able to fire their CFO. They were able to rebalance their board of directors. They're able to issue stock, things like that, and create a very valid business structure. Well, silver, in order for it to change the structure, would need to have different investment demand, different demand uses, different supply crunches. So it would need to have, maybe some new innovation that requires more and things like that. What I'm saying is silver's unable to innovate itself in its ease as GameStop is. So I think that they're two completely different ideas. I think that if silver all of a sudden had some new medical purposes, new green solar, energy type plays, or new innovations that could create more of this validation, then you might have the trajectory that something like a GameStop would have.